Kitco News special coverage of PDAC is brought to you by Gold Mining and Uranium Energy Corp.
Welcome back to PDAC 2023, the largest mining conference in the world. My guest today is George Burns. George is CEO and President of Eldorado Gold, a producer of gold and base metals with operations in Greece, Turkey, and Canada. George, welcome.
Thanks for having me.
So to get started, I wanted to get a sense from you. We've been here a few days. We've heard a pretty broad range of opinions about the sector and about gold. I wanted to get a sense from you of what you think sentiment is in the industry right now.
I think it's really positive sentiment. For our company, we've got 55% growth in our production. So we're getting a lot of attention with the production growth. And we've got high quality growth coming with that. We're bringing on a very low cost project in Greece that'll be in production in about 2.5 years. And I think in the gold sector, we've seen banks buying gold. I think that's a good base for the industry. And you look at the gold price, it's been performing pretty well this year in spite of inflationary pressure, in spite of recessionary fears. So I think we're in a good time for the gold space.
And looking at base metals, your company's in both, obviously. We've heard a lot of talk that, more from the gold side, that base metals, battery metals, and green tech in general might be eating into the investment on the gold side. How do you see that? Is this cannibalizing investment in gold, or can this be something complementary for the industry?
I think it's something complementary. In the case of Eldorado, we're about 80% gold and 20% base metal. And the 20% is dominantly going to be copper with our Skouries project coming online. I think copper is going to be an important part of electrification of the planet. And of course, our operation in Greece, it'll be in a good location where Europe's looking to, solidify their electrical network, given the impacts of the Ukraine war and the impacts on energy and particularly natural gas. So we think copper's got a positive outcome going forward, and we're going to be coming on stream, I think, at a perfect time. In terms of investment sentiment into gold, I think it's a good future we have in the gold industry. I think with gold increases from central banks around the world, I'm a believer in the World Gold Council's 24/7 gold, where we're working on getting transparency around gold to the point where you could purchase gold on a cell phone, much like Bitcoin, but it would be backed by gold metal. So I think that could be an important catalyst in the next couple of years as that gets rolled out. So I think it's a bright future for gold.
And where do you see that moving? We've seen a couple of different models for this, for digital gold, you could say. We have the model of purchasing specific amounts of gold which are held in a vault and can be traded. So you have the advantage of the blockchain, but you're buying a specific amount of gold. We also have gold-backed stablecoins. What do you think it's going to take to get gold people into this space? Because we've seen some moves up in digital gold, or more on the stablecoin side. But do you see progress on that front?
Yeah, I think we're making good progress at the World Gold Council, in that what we're working on is to be able to trace and have governance over gold from us as miners mining the gold through smelters, refiners, and the consumers of gold. And the whole idea is that we've got transparency. You know where the gold came from. You know it's been produced in a safe, environmentally, socially acceptable way. And if we get the right governance metric over this globally, then there could be confidence that I can buy any one of those products from my cell phone and have confidence that value is backed by physical gold. And so that's what we're working on, and we think that's going to evolve in the next couple of years and be an important driver for gold.
So I wanted to talk a little bit about inflation. Obviously, it's on everyone's mind. We heard comments from Fed Chair Jerome Powell yesterday saying that the December projections are kind of out the window, where he's expecting higher inflation. He's expecting to raise rates further, and markets are now pricing in a 50 basis point hike at the next meeting. Do you think the Fed will manage to keep inflation down?
Yeah, I think their fiscal policies will definitely continue to push things in the right direction. Exactly when it's under control, uncertain. But for gold, I would say we've seen general volatility during this time of uncertainty. But generally, if you look at the gold price over the last year or two, we've got a nice uptick. So I think in spite of all those pressures, the gold market's in a good space. And I think, again, with the World Gold Council's 24/7 gold, there's a bright future for us.
So looking at the prices, we saw gold hit 1950 not long ago, but it pulls back every time we get negative inflation data, or every time anyone at the Fed opens their mouth, it seems. Gold pulls back a bit. What do you think are the chances that we could see all-time highs in gold prices in US dollars? Obviously, we're there in a lot of other currencies.
Yeah.
But what do you think are the chances in an environment of sustained inflation?
It's tough to predict exactly how the market's going to react and when. I think over the longer haul, we will see gold break through 2,000. And if I was guessing, it's probably as the inflationary fears go away and some of these other catalysts come in line. For Eldorado, I think the most important thing for us is us focusing on what we can do to create value for our shareholders. And it's a pretty exciting time. We've got 55% growth in our production profile over the next 5 years, and it's steady production growth. We're going to have 9 to 16% annual production growth over that 5-year period. And the most important part is we're going to see our all-in sustaining and cash costs drop dramatically because the Skouries mine that's under construction, the copper byproducts pay all the sustaining costs. So gold is essentially free cash flow. So, there's a really good chance for us to re-rate our share price. We're trading at about 0.5 P to NAV. Our peer group's around 0.7. And that disconnect against the average in our peer group is that we have this very high quality development project just kicking off into full production. So as we get closer to delivering this, we expect to see a re-rate in our share prices. And then the fact that we're going to be driving our costs down with that high quality asset, we're going to be well below the average cost in the mid cap space. So that likely leads to us being higher in the P to NAV. So we're really focused on being a high quality gold producer with a significant byproduct in copper, and believe our shareholders are going to be rewarded not only from whatever the gold price is at the time, but from the quality of our investments and our production.
Well, that's something that we've been hearing a lot about is this disconnect between the price of gold being high and the stock valuations of the miners themselves being undervalued, especially looking historically, looking at when gold was at these prices or when gold was at a certain level, miners ought to be higher than they are now. And we've seen projections of maybe 85% growth for the miners built into the current gold price, assuming that things don't necessarily have to move very dramatically. What are your views on that? What do you think it's going to take to get miners to the valuations that they would be historically relative to gold?
I think if you look at just the general stock market, everything's come down, and gold stocks have come down with that pressure. And so I think that's the major trend. And then the mining industry, we have unique risks. We've got environmental, social, different jurisdictions have government type risks. So there are risk impacts that impact mining versus the general market. But my own overall view is that you've seen overall stock market come down. And as we get a hold of inflation, things get back to normal, I think you're going to see the gold stocks move with the entire market.
Well, looking at those risks, obviously a major risk has been the war in Ukraine. Now you have operations in Turkey and in Greece and Western Europe. Turkey could not be more central. Western Europe is obviously feeling the pinch of this. So you're probably paying a little more attention than companies that might have all their operations based in the Americas, for example. What do you see? What are the impacts you're seeing on supply and potentially on price? But what are the impacts you're seeing on supply from the war in Ukraine?
Yeah, I mean, there's really one impact that we've seen, and it's on energy. So in Europe and in Turkey, the lack of natural gas coming from Russia has pushed up energy prices. Our cost for electricity is roughly doubled from, say, 2 years ago. And electricity is about 10% of our operating costs. So we've seen that pressure a little bit higher than what we've seen just general global inflationary pressure. I believe that's going to come under control in the next couple of years. We see Europe working on energy strategies. We've seen costs actually come down, and we've actually have received subsidies both from the Greek state and the EU to control those costs while they work on various energy strategies to be less reliant on natural gas. So I'd say that's the one impact. In terms of our general supply chain, we've really been unimpacted. I'd say it's business as usual relative to, say, North America.
All right. Well, thank you so much for joining us today, George.
Yep. Appreciate the opportunity.
This was very interesting.
Thank you.
I'm Ernest Hoffman for Kitco News. Keep it here for more coverage from PDAC 2023, and don't forget to subscribe to our channel.
Kitco News special coverage of PDAC is brought to you by Gold Mining and Uranium Energy Corp.